Broadcom are basically flat in after-hours trade after reporting Q3 earnings that beat on the top and bottom lines. Joining us now to break down the numbers, Stacey Rasgon of Bernstein Research. The shares up about 0.4%, in fact. Great to see you, Stacey. Thanks so much for joining us.
Good to be here. Thank you.
What's your first take on the read?
Yeah, look, it's really solid. So the quarter was a nice solid beat. Semis maybe a touch, like in line to a touch below in the quarter. Software a bit above. Overall strong beat. And the guide is quite strong, both on the top line as well as on margins. Margins in the quarter, very good. They did a 75% gross margin, almost 61% EBITDA margin. They did like a 51% free cash flow margin. I mean, these guys are just a machine. And that machine is continuing into next quarter. It looks like the momentum is still going. The flywheel's still going.
And so how does that compare to some of their main competitors? And are they facing the same pressures in terms of supplies?
I mean, they are. And frankly, that may be one reason, like you look at the semi numbers, like it's really hard for them to beat on semis, similar to lots of folks right now, because they are supply constrained. So they're kind of shipping. Broadcom, at least, they recognize the shortage situation much earlier than everybody else. They've had customers on allocation basically since last, April of 2020. And they've been talking about their semi business effectively being sold out for the year. And I mean, it kind of looks like that. So we're seeing, kind of incremental growth through the year from semis. But by the same token, I'm a lot less worried about things eventually like hitting an air pocket or coming to end with Broadcom because of how well they've been managing through the pandemic and through the shortage situation. But overall, like I said, it seems to be really, really good. Good, solid revenue in the quarter. Good, solid beat both on the top line as well as on margins. And the margins and free cash flow continue to march higher.
What should they do with the excess cash?
Yeah, this is, so Broadcom's capital allocation strategy, half the cash goes to the dividend, and the dividend's very good here. Half of it goes to either M&A or buybacks. And they were rumored to have been looking at a company a couple of months ago. It doesn't look like anything happened with that. At some point, they'll have to make a call. Do they continue to pursue M&A this year? Do they save the cash for M&A next year, or do they just buy back stock? But at some point, that cash will be deployed either through M&A or through buybacks. Personally, I'm actually more partial to M&A. It's one of the controversies in the stocks, but I want to see them buy stuff. They're actually really, really good at it. So I would love to see them buy something. But if they wind up buying back stock instead, I'm totally fine with that as well. And that'll be a good value driver.
Broadcom, which is obviously in focus right now, given the report we just got, or just looking across the semiconductor sector more broadly, what are, I guess, sort of the key takeaways as we go into the final months of the year in terms of where to potentially invest and where to steer clear?
Yeah, look, so I mean, everybody is somewhat nervous, just given the strength of the demand and the constraints. We've all kind of seen this movie before, and it tends to end badly. We'll see if this time is different or not. But people are definitely worried that we're approaching, quote unquote, peak cycle. If you are worried about that, I like a few other things. I mean, look, if you're worried about cyclical, you can look at secular names, things like a Qualcomm, where there's some real secular stories and it's cheap. Names like ADI, Analog Devices, have a M&A catalyst and cash return. I still think, though, if you are nervous, this is actually our top pick because look, like I'm less worried about the cycle because they are sold out. They got the software business that adds support. They're going to deploy cash. It'll either be through M&A or buybacks. Either way is great. Good dividend, which offers support. It's got the highest margins and the highest free cash flow of anything in the industry. And except for Intel, it is the cheapest thing in my coverage. Like, what's not to like?